Hello everyone, this is CA.Tejeshwini Chiranjeevi. In this video, let's try to understand about the section 24, especially 24p over here. Okay, interest on borrowed capital. Before looking into this section, let's try to understand what does the section 24 means. See, basically, under income from house property, you have deduction under section 24. That is, you can take two 24A, 24B. 24A speaks about the 30% of the net annual value as the deduction. That is, the flat deduction of 30% would be available for you. When you're computing the income from house property over here, you have something called as deduction from the annual value under section 24. This is the only deduction which is allowed under income from house property. That is section 24. By the subsection is 24A and 24B. Okay, 24A speaks about 30% of the net asset value is allowed as deduction. That is, suppose you have the net asset value, you have the gross annual value of 1 lakh. It means you can take 30% of that. 1 minute, I'll give you more clarity. You will also get, all of us know, you will also get something called as municipal tax as the deduction here. Correct. Municipal taxes, let's consider 10,000 and the remaining is 90,000. This 90,000 is nothing but the net annual value. On this net annual value, you can take the deduction of under section 24, under section 24A of how much? 30% of this NAV of 90,000, you can take it as deduction. That is 30% of 90,000, that is 27,000 you can take as the deduction. This is the flat deduction which is available. So once this flat deduction is available, can you claim any other deduction apart from this 30% flat 30% deduction? Yes, there is another one, 24B. Apart from this, let's consider insurance premium. That is, you have taken insurance and you have paid premium for your building. Can you take the deduction for that? Answer is no, because they're already giving you 30% of flat deduction, right? So all those things, the maintenance, the current repairs, all those things are not considered to be a deduction under your income from house property. Flat deduction of 30% would be provided. That is 24A. What about 24B? This is nothing but the interest on the borrowed capital. See, you have taken the loan, that is borrowed capital is nothing but the loan here in easier terms. You have taken that loan for the purpose of acquisition or construction or the repairs or the renewal of the reconstruction of the property. You have taken for that purpose, and then yes, you can claim the deduction under section 24B under your income tax. The answer is yes, but there is a method or the way how you can do it. Okay, see, we'll take that as an example. Whenever you are taking that interest on the house property, for that you have taken the loan for the house property and you are paying interest over here. Interest is payable. I did not say paid, it is payable. Means even though you did not pay also, you can still take the deduction under section 24B. That is nothing but the interest for the uh, borrowed capital. Here it has been divided into two things. That is, one, pre-construction period. There is officially not mentioned in income tax as post-construction period. It's just that for the name purpose, we are taking it as pre and post. Okay. See, here it is going to be divided into two. Pre-construction period, and in our, for simplicity purpose, we will take it as post-construction period. Let's consider you have taken loan on 1/5/2020. Sorry, you have started your construction on 1/5/2020, and the date or the sanction of the loan is on 1/7/2020. Okay. The period of construction completion is as on 31/5/2024. Now, the date of construction completion is this, date of starting the construction is this, and date of loan is this. Now comes the two question. What is the date of commencement or the date from which I can take the interest in easier sense? See, I am only interested in taking the deduction. That should be as much as possible. And department says that yes, we will give you the interest deduction, but wait, we will have 2 points. That is, when you can start claiming the interest deduction and when you can stop claiming the interest deduction. I am specifically speaking about pre-construction period now. Post-construction period, we'll speak about it later. Okay. What is meant by this pre-construction period is the date from the construction or the date of loan. Either from these two dates, whichever is later will be considered as the start period for you to consider the interest calculation. That is, now they have given in the question, date of construction is 1 5, and date of loan is 1 7. You have to take, you have to start taking or calculating the interest now. How do you take it? Whichever is later. That is, it means 1/7/2020. Suppose if you reciprocate it, let's consider 1/5/20 is the date of loan and 1/7/2020 is the date of construction. What you would have done here, you would have taken whichever is later. Obviously, it will be 1/7/2020. Okay. See, the logic behind that is very, very simple, people. See, you have started the construction and the date of loan is here. You have started paying the interest right from which date? Right from this date. So they're taking whichever is later. So now reverse this one. Okay. Consider this as date of loan and this as date of construction. Suppose here also in this situation you will take whichever is later. Or you have taken loan on 1/5. It is your mistake that you did not start the construction on this date, even though you had money. You had started on this date. So we'll do one thing. We'll keep it as whichever is later only for the purpose of interest calculation. Okay, for the purpose of what? Interest calculation, that you can take it as deduction under the income tax under section 24B. Remember, whichever is later. Okay, the end period is something which is interesting here. See, normally speaking, you say what is your pre-construction period in general terms. You will say the period from before which the date of construction of your this construction has been completed. You will take it backwards, right? But under income tax, you can't do that. You have to take, that is whichever year your construction of your building is completed. You have to take the 31st March, which is immediately completed. See, immediately completed is your 31st March 2024 only, no? See, 31st March 2025 is forthcoming. It's not completed. It is coming 31st March. I'm speaking about immediately completed 31st March. That is 31st March 2024. So now what you will do, you will take right from the start date till 31st, immediately completed 31st March, right before the date of construction completion. This will be the period started and the end date for you to take interest on pre-construction period. Okay. So now if I am provided for you to do the calculation, let's do something. See, in PY 2021, what has happened right from 1/7/2020, correct? Right from 1/7/2020 to 31st March 2021. What I will do is that I will take the just an example. 10 lakh is the loan taken, 10% is the interest, and what we have calculated is 75,000 is the interest. And this construction is completed, and my end period is 31st March 2024. So I have to start from this period, that is 1/7/2020 to 31st March 2024. So what I will do is that I will do the calculation for the entire year till this year. This period of interest, pre-construction period, whatever the interest I have paid, this will be called as interest on pre-construction period. Okay, it's payable. So now what I will do is that I will take the total interest on pre-construction period. Now I'll do 1/5 of that. What is this 1/5? This is I am dividing it for 5 years and multiplied by 1 is nothing but 1/5 installment. Every year you are going to take 1/5 portion as your interest on pre-construction period, which is eligible for your deduction under section 24B right from the year in which the construction is completed. See, when is the construction year completion period? This is in 24/25, right? See, you can see here. Which is this year which has been completed? It is in PY 24/25. So what you're going to do is that you're going to take 24/25 as the year of construction completion. And this will be divided for how many years? 1, 2, 3, 4, and 5 years. 5 years you're going to divide it 1/5 and take it right from the year of the construction completion till the next year you are going to take it. Clear? Now, the next portion. So if I take the post, see, it's just for the name purpose I've given as post. There is nothing called as post-construction period, but still, just for the name purpose I've given. The post-construction period is nothing but right from the year of completion going forwards. You are paying the interest, right? The interest is payable. You have not repaid the loan, so the interest is payable. So whatever the interest is payable during the period, that amount you are going to calculate and add it as the interest which is payable during the period. So you will add the pre-construction period and the interest which is payable during the period, and total whatever you will calculate will be nothing but your 24B. That will be your total completion. Clear? That will be your nothing but your total completion. This is nothing but your section 24B. Clear? Now, this is pre-construction period and post-construction period interest completion. Fine, very well. So now let's move forward to the next point, that is you have calculated the interest, that's totally fine. There are small things that you need to understand in this section. That is, suppose you have taken a earlier loan, that is the loan number 1 you have taken for the house property construction 10 lakh rupees. Let's consider you have taken it for 15. Now the bank is stating after 1 year you have paid certain amount, and you after 1 year what is the bank stating? Bank is telling, Mr. A, you do one thing. We have a loan now which can be provided at 12% rate of interest. We provided you for 15%. No, we can provide you now for 12%. You do one thing. You take the new loan, repay the earlier loan of 15%. Now you pay the 12% interest. No, it is better for you. Just an example. What will I do being Mr. A? I will definitely take that. I will pay 3% less interest in a year. I will, obviously, I will take happily and I will repay. So now comes the question, whatever is the new loan which has been interest which is payable for the new loan, is it available as deduction under section 24B? Yes, it is available as section deduction, because the earlier loan was taken for house property construction, house property alterations or the repairs, acquisition, etc. So the new loan is also available. Now, so whatever I told you, it is going to be if in 5 equal installments, that is 1 by 5 is considered here. Now, now, when it comes to the interest on loan for the purpose of 115, for the, let's do this. Before this, let's do this. Interest on loan for let out property and self-occupied property. You have done the interest calculation as above. Very well. Now comes the question whether it is let out property or self-occupied property over here. Okay. See, in case of the let out property, remember one thing, every rupee of interest payable that you have calculated, pre-construction or post-construction, whatever it is, every rupee of interest which is payable during the period or whatever calculation you have done which is eligible under section 24B is allowed, fully allowed. What about self-occupied property? You have restriction here again. What is that restriction? Where the loan is taken for acquisition or construction of house property. Where what? Loan is taken for acquisition or construction of house property. What is that? Where loan is taken for acquisition or construction of the house property. Very, very simple. You have taken loan for the purpose of buying the house property or constructing the house property. And remember, these are and clause. And if you have taken the loan which is taken on or after 1/4/1999, and acquisition or the construction which is completed within 5 years from the end of the financial year in which the capital was borrowed, that is, you have taken the loan, and the from the date from the end of the financial year in which you have taken the loan, within 5 years you should have constructed the your construction should have been completed. If answer to all these 3 points is yes, then you can take a maximum of a deduction under section 24B for self-occupied property would be what? 2 lakh. If any one condition, see this is and clause, I told you, any one condition not satisfied, you can take a maximum of 30,000. What if you have taken for repair, renewal, reconstruction? You can get a maximum of 30,000. Clear? Very well. What if this is 115 BAC now? See, in case of LOP, in case of LOP, whatever might be the situation, if you are opting for 115 BAC, for LOP property, you will get 100% of the deduction under section 24B. You will get 100% self-occupied, sorry, LOP property, even in 115 BAC, you will get 100%. What about self-occupied property? No deduction. Under section 24B, there is no deduction for self-occupied property if you are opting for 115 BAC. Remember this point very well. Clear? So this is about your section 24 and specifically 24B. Thank you.